I'll talk to you about ideas that you are asking me in order to create money for your future and give you the financial freedom that you desire. Welcome to the Nigel Green Talk Show. As you may well know, I'm the CEO of the world's largest international financial advisory group. 21 years we've been advising people all around the world about how to invest effectively. You can ask me any question you like. Send your questions in and I'll be happy to answer each and every one of those questions. My first question today is, what things should you consider before you invest in the stock market? Okay, well, that's a really important question. In fact, many people back away from investing in the stock market because they're not sure what factors to really consider. The first thing that you need to consider is your time horizon. Are you an investor for the short term or are you an investor for the longer term? It's actually really, really important, because if you're an investor perhaps as an older person and looking to create income or a longer term investment, then you should be looking at stock that are producing dividends and producing longer term growth. On the other hand, if you're a younger individual and you're thinking, I actually want to make some money over the next 2 or 3 years, then you're going to be looking at stock in a totally different way. You're going to be looking at what the current trends are. You're going to be looking perhaps to see the growth stock and where you can potentially gain from industries and trends that are happening in the market. Of course, you should listen to my talk show and listen to my YouTube, because then you'll get ideas on what's happening in the market right now. So the first thing to consider is, what time horizon are you really happy with as an investor? You also need to think how your attitude towards risk is. Are you the sort of person that doesn't mind if stocks are volatile? Growth stock in particular tend to be more volatile. They don't go up in a straight line. Many people have seen Nvidia and it's produced massive returns, over 200% in the last 12 months. And you think, wow, that's going to happen again in the next 12. Well, it's possible because this AI trend is going to continue. However, sometimes there's a sell-off in a day and it might be a 5% negative. So are you prepared for volatility? If you're investing in growth stock, just realize when you invest in growth stock, then yes, there's opportunities, but it's going to be more volatile. In other words, the market can go up very quickly, but it can also go down quickly. If you're a longer term investor, then quality stock and diversify. You might want some money in the AI stock like Nvidia or perhaps Microsoft that's gaining, but you'd want to diversify. That can slow your returns down, but it means you get less volatility. It means you get a steady return. I would always suggest you talk to a financial advisor. Why? They can talk to you and they can analyze your current situation, your attitude towards risk and your term, and they can help you perhaps go into a fund. Why would you invest in an investment fund, you may ask? There's charges. Well, yes, there is. But you don't then have to worry about the stock market. You can actually be getting on with, if I can call it, your day job. You can leave the managing of the money to somebody else. You may pay 1% per annum, but at least you don't have to be concerned about it. If you're an individual investor, on the other hand, as I've already said, you're looking at growth or you're looking at returns. Then if you want to do the decision yourself, again, once we've gone to growth or longer term, then you can then look at other factors. What are the factors? I've mentioned trends. I'd also look at what are the profitability of the company. Is it really profitable? And is that profitability sustainable? Lastly, I'd look at competition. Warren Buffett, the most famous investor in the world, the most successful, worth over 100 billion, he looks for companies that have got what he calls a moat. A moat is a company that's difficult to compete with. Take Microsoft as an example. It's difficult to compete with Microsoft. They've got such a big share of the market. So therefore, you know that if it's a company like that, they're less susceptible to competition. So when you're investing, you're looking for opportunities, you're looking for good quality, long-term returns, and generally, you're looking for a moat. You're looking for a company in a unique position in a trending up industry, And that's the most important factors to look at when you're investing money. My next question is, what are the top 5 high growth ETFs you'd be invested in order to beat the S&P? Okay, well, let's look first of all at the S&P. The S&P has been an incredible index. In fact, last year would have given you a return of over 21%. The biggest part of that return, however, would have come from a few stock, which are called the Magnificent Seven. They're the stock in the AI industry or connected to AI. You could say, what's going to beat the S&P? Well, the advantage of the S&P is it's 500 stock. And if those 7 don't perform, then, of course, you have other stock within it that are going to perform. So what's going to outperform it? Well, if you believe, like me, that technology trends are going to continue, then you could just invest into the NASDAQ, for example, which is just technology stock. Or you could look at particular sectors. For example, I like the energy sector. I actually think the energy sector will beat the S&P next year. Why? Well, the world needs energy, fairly obviously. You'll see a world where we've got difficulties, but in Ukraine and Russia and also in the Middle East. Then in those sort of circumstances, what's happened historically is the oil price goes up. Companies able to produce energy, able to produce good profits for themselves because it's a difficult market. I believe that the energy sector will beat the S&P. I like China, and you may say, well, China's stock have done really badly, and you're absolutely right. It is much more speculative, but I do believe there's ETFs that you can look at in Hong Kong and companies that are registered there that will gain from China's recovery. Will it recover? That one's a bit more speculative, but nevertheless, the stock is lowly priced, and in my opinion, if I take Alibaba just as a simple example, it's selling at the moment at 14 times profit. If you compare that to American companies, they're selling at double that. In other words, you've got companies registered in Hong Kong selling at half the price compared to their profit as in the US. Will they gain? My opinion is yes. So they can gain from beating the S&P. So we've got tech, we've got energy, we've got China. I'd look at some of the emerging markets. Brazil's done well. It's one to consider. I'd also look at the banking sector to give you the 5th one. Okay, why? I actually think the banking sector are going to continue to make profits, but I'd go in particular for the European banking sector. So if you want 5 ideas, 5 ETFs that are going to beat the S&P, you can always look back at this video in 12 months' time. There's my tips for 5 ETFs that are actually going to beat the S&P in 2024. The next question that someone has asked me is, I'm new to investing, earn $40,000 a year as a teacher, and I've 54,000 sterling saved up. What should I look for to invest for good investments? Okay, well, of course, I don't know everything about this particular person, and it would depend on their age. It would depend on what their objectives are. For me, if you've got that amount of money, a normal process for most people would be to have 80% of my money in good, well-managed funds that are diversified. You can go to De Vere and we'll talk to you about the best managed funds in the marketplace. So with 80% of my money, I'd be looking for steady returns. If a person's a teacher, and I shouldn't guess, but I would suspect if I asked them if their attitude towards risk would be perhaps a 4 out of 10, maybe more cautious than some. As a teacher, then obviously they may well want a longer term investment. I may look at fixed interest, which you can lock in right now. So again, with that 80% of money, I'm looking for steady returns. And with the other 20%, I'd actually be looking for some of the areas where I feel there's some massive growth. So 20%, a little bit more speculative. What's the trends? What's happening? AI in particular, companies like Microsoft. But 80%, nice and steady, well managed, or good high yield certificates, or something that you know is going to give you a good steady return and beat inflation, and then 20% into stock that you believe are highly likely to give you that little bit of extra return. But of course, you've got the more speculation in that 20%. 20% would have Microsoft, perhaps some energy, a company like Shell. It perhaps would have Nvidia, the company that produces the chips for AI. You'd have a selection of good stock in good trends in order to make sure you maintained your money, your capital was safe, but at the same time, you are getting a much better return than leaving it in a bank account where, in terms of inflation, you're likely to be losing money. I've been asked a question here. 2024 has been dubbed as the year of elections and potential chaos, with 40% of the world choosing their new governments. What's your prediction? Wow, that's a fascinating question. And it really is a big question. We look around the world and we see America has got an election coming up this year. The UK is the same. It's never been a year where there's so many governments are seeking re-election. So I'm actually going to give you two ways that you can look at this, because you're actually going to have to make your own interpretation. Although if you watch to the end, I'll give you my interpretation, but it's just a personal opinion. So when we look at this particular area, what are governments going to be doing? Well, they all want to be re-elected. So they're going to be trying to, I'll use the word carefully, but manipulate the economy. They're going to try and make sure that it's doing well and the figures look good. They're going to be trying to make sure if there's any extra money in the kitty, and they will have maybe saved up a little bit, have it set aside to really try and make sure there's a feel-good factor going into the election. So expect all the governments around the world that are going into election, and it's 40% of the world and lots of the most biggest economies, then expect them to be trying to do everything they can to create this feel-good factor. So you'd think that stock is going to be going up. But then, of course, there could be chaos. Why could there be chaos? Well, think about America, just as an example. I don't know who it's going to be, but it could be Biden versus Trump. And you've got all sorts of things could be happening if it's close. Or perhaps Donald has a problem with these cases that he has against him and maybe even ends up in jail. What would happen? Could there be chaos? Well, there could be chaos, particularly if it's a close election, as is likely in America, whoever is competing. If you go to the UK, you could have a Labour government, which some people will say will be good, but others will say, well, taxes are going to be going up, and that's a problem for companies. So think about it as, for me, a year where you've got the first part of it, governments trying their best to make sure the economies are doing well. I would suggest to you that you're going to get perhaps a sell-off after last year's massive growth and good returns in the stock market. Could be volatile in January. I would suspect that it will settle down by February, March, and you're going to see governments working hard to make sure the economies are doing well. And then as we approach the elections, I actually think there's going to be some chaos. But don't forget, when there's chaos, there's opportunities. What does it mean? Well, when the markets are more volatile, then if you're brave, and only if you're brave, then you can pick up bargains. So for me, it's actually a mixed year. You can make your own opinion up because it is a market where there's nobody actually has a crystal ball and knows for sure what's going to happen in the market. Governments certainly will be keen to be re-elected. Chaos, the stock market doesn't like uncertainty. And if we get uncertainty, expect volatility. For me, there's a good part of the year, and then there's a part where I'll be looking for bargains because it's going to be volatile. What was your first ever investment? And what is your love about the markets? Okay, well, perhaps my first investment turned out not to be an investment because somebody told me, and maybe you have heard the story, that a car was an investment. In fact, I've actually kidded myself over the years that cars are a great investment. In fact, every car salesman told me, this one's a good one and it won't go down in value. Okay, well, cars turn out to be a liability. I've done it many, many times, and I've bought some lovely cars, but every time, guess what? They go down in value. So be careful when you talk about investments, what really is an investment. My love, however, of real investments, and that for me was investing into stock and also property and things that could make me a return, actually came from the fact that early on, I actually was a person that earned good money, but spent my money. Okay, then I realized that if you invested, you could get ahead of yourself. Most people in life, they spend their time trying to catch up on debt and credit cards. If you get into that situation, then really you spend your whole life spending 2-3 times what you've actually paid for something. Why? Well, a credit card, if you add it up over the years, what will it cost you? I suddenly realized that I'd spent my money and I actually needed to get ahead of myself. So my love of investments came from the fact that I realized I needed to get rid of my credit cards. I reduced my costs, made sure that I kept myself in a good position whereby I built some money to get rid of the debt. And then I started to invest and I started to see good returns. I started to realize that I needed to study. And I realized that I could either talk to someone in the financial industry and get good advice, or I could learn about the markets myself. I chose to do both and ultimately came into the market or came into the business to advise other people. Why? Because in the world, I think there's two things are vital. For me, it's health and wealth. I decided that I wanted to invest money to make my money grow so that I had money, but I also decided to study health because I actually think the two go together. And if you can actually create money so that you can choose to work and enjoy or improve the odds of being healthy, then guess what? You've got the two most important things in life. I would urge everybody watching this show that you should always be looking to try and make sure you look after your body. That's an investment, but also make sure you accumulate some money. No one wants to be in a situation whereby they're old and poor. Let's face it, everybody wants to be in a situation where they get ahead of themselves. Interestingly, both things, whether it's health or wealth, take the same thing. They take discipline. They take actually making sure you discipline yourself to put some money aside. You have to pay something today for a future benefit. So my love of investments was from the fact that I realized if I was prepared for the discipline today, the effects of compound interest meant I could put myself into a position where I never had to worry about money again. Think about building muscle. If you build your muscle, you can put yourself in a position when you're older, you're in a position whereby you've got strength and you're able to go into a good future. Think about money in exactly the same way. It's wonderful how you can invest, put it into good investments, and you can be disciplined to do so. And one day you get freedom, financial freedom. You can go into a restaurant and you can buy the food, not buy the price. For me, the discipline is to give me freedom. And what do I love about the financial industry and investing is ultimately it gives me freedom. And in fact, everything I do in life is actually because I want to be in a position whereby I'm in control. Okay, if you listen to this show on a regular basis, I'll talk to you about ideas that you are asking me in order to create money for your future and give you the financial freedom that you desire. Thanks for listening to our show. Drop any questions you've got below and we'd be pleased to answer as many questions as we can. I'm the CEO of DeVere, the world's largest financial advisory group. We have advisors around the world and we're happy individually to sit down with you and give you personalized, tailored advice. Get in contact with us and we'll make sure that you get the best investments for your personal situation. Please like and share the video. We live in a world where there's a shortage of good financial information. Thank you again for watching.